Hi friends, you're Rosario from Simply Options. Today we are going to touch upon the hot yet important topic, new SEBI F&O regulations. So this regulations is going to change the dynamics completely, but before getting into this topic in detail, let us understand why such a regulation is being implemented by SEBI. Now, why SEBI has taken this drastic measure? For that, let us, like Ramana Vijaygan, let us get into some statistics. So, in India, totally we have approximately around 10 to 15 crore demat accounts. So, this is the total number of demat accounts we have, out of which only 1 crore and 10 lakh of individual traders are actively trading in F&O. Right, it's approximately 10% of the people who have the demat account are actively trading in the F&O segment. Out of this 1 crore 10 lakh, overall 93% of the traders, that is 1 crore 5 lakh of the individual traders have lost money. This is the hard hitting truth. How much they have lost? They have lost 1.8 lakh crore money. So out of there are only 1 crore people who individual who are trading in F&O, out of which 93% of the people are actually losing money. This is fact number one. Fact number two. So those who are earning money, are they earning big amount of money? No. Out of which the remaining 7%, the 6% of the people are not even making more than 1 lakh rupee. Which means 99% of the people are making money which is less than 1 lakh. This is not just for 1 year. Last 3 years put together, 22, 23, 24, totally put together, they have not even crossed 1 lakh profits for the last 3 years. Which means only 1% of the traders, that is only 1 lakh people out of 15 crore demat account, only 1 lakh people are making 1 lakh and above profits cumulatively for the last 3 years. So this is the hard-hitting fact, truth which SEBI has found out in their detailed analysis. So they thought this F&O is more of a gamble than a business. So they had to pitch in with a few drastic measures to curb this gambling mentality of people losing money in a huge sum. Now let us understand what all the regulations SEBI has implemented and its impact. SEBI in total, it has implemented 6 new regulations for F&O traders. I would like to classify these 6 new regulations into 2 segments. One is a bigger impact regulation, the other one is a smaller impact regulation. Okay, so let us start with the smaller impact regulation. Number 1 item in the smaller regulation is upfront collection of the option premium. So this is done by very few people. That's why I am calling it as a smaller impact. The reason is, generally when you want to buy an option, you like to say 5,000 worth of option, you have to pay the entire 5,000 to the broker. But there are very few brokers in India, they will collect only 1,000 rupees and 4,000 will be financed by a broker for you to buy this 5,000 worth of option. So that is being avoided by SEBI with this regulations. And the next one is removal of calendar spread benefits. So what is calendar? Basically, the people would like to short a monthly contract. For example, in Bank Nifty, they will like to go a short straddle in monthly contract, and they will be hedging this monthly contract in the current week expiry. Since the current week expiry, it is expiring today, the premium will be very less and hedging cost will be very less. So this was the benefit which is used by many of the traders. But that also SEBI as going forward, this benefit is also taken out. If you buy the current week hedge, the margin requirement which will come down will not be in effect going forward. So this is the other step it has been taken. And the third one is the ELM, the margin for an expiry day trade, it has been increased by 2%. 2% technically in our overall terms, it will go up by 10-15% of the contract value totally. For example, if you want to sell in one lot of Nifty on currently it will take 1 lakh. Due to this increment, it will be 1.1 lakh. So it is also a minor change which SEBI has brought in for the expiry day trades. So these three changes are not so material effect for the traders, which we can sail through in a easier manner. Now let us see what all the hard-hitting changes which is brought by SEBI and its impact on the traders. Now the three major game changer regulations, what are they? The first one is the increasing the contract size value. So currently the contract size value for Nifty is 5 lakhs. So we have 25 quantities as a lot size and the Nifty is trading at 25,000, which is per contract the contract notional value is 6 lakhs approximately. This has been now changed to 15 to 20 lakhs. So that has raised all the index contract size approximately by 2.5 times or 3 times the increment in the contract value. So due to these regulations, the current lot size will be revised to so on and so forth. Nifty from 25 it will become 60, Bank Nifty from 15 it will become 30, Sensex will become from 10 it will become 20, and so on and so forth, as mentioned in this dialog box. So what is its impact? So what it is impact for an option seller, big option seller, small option seller and option buyer. Let us see in three segments. For an big option seller, this change is not going to affect in a bigger way because they do have a lot of capital. The current margin requirement to sell one option is 1 lakh. In future, it is going to be 3 lakhs. But anyway, they are sitting, so those people who are with more than 20 or 25 lakhs capital, for 1 lakh they can do 20 short straddles. Going forward, they will be doing 7 to 8 short straddles because this 1 lakh margin is going to increase to 3 lakhs. So they will be able to do 8 short straddles instead of 20 short straddles. With 8 different strategies, you can get the clear diversification benefit. So those people who are with the higher capital, they will not have any pinch. Now, what will be the effect on the small option seller? Here, it's a small, very small and small. Let us classify that way. Very small people, they don't have any other go other than converting themselves as an option buyer. Those who have 50,000, 1 lakh or 2 lakh or 3 lakh for that matter, they will not be able to do even one lot. So they will be forced to become an option buyer, that is per se. And those who have say from 3 lakhs to 15 lakhs capital, they will not get the clear diversification benefit. Previously, they will be doing some 10 lots of different strategies or different timings. Now, they will be able to do only 2 or 3. So, they will be also be impacted in a bigger way, those who are having like less than 10 lakhs capital. And they also would like to try more on buying rather than selling. So this is going to be the impact on the very small and small option seller. But in the option buyer case, I don't think anything is going to affect them. The only thing, those who are having those who had some 5,000 rupees, now they will have to have some 15,000 rupees to do the same activity. Those who are gambling with 5,000, they can easily very well arrange another 5-10,000 and they can do. Or they may go still OTM. Those who have 5,000 and they can't buy anything, they can go to buy a OTM option which is lesser premium and lose the same amount of money. So nothing much is going to impact for them. So this is the impact on the first point. And the second one is, this is very critical. This is going to be a game changer in my opinion. The removal of daily expiries. Every day there is an expiry. Mid cap, Monday, Tuesday, Wednesday, every day there is an expiry, and the market movement is not natural at all. The premium of 10 rupees option going to 100 rupees within few minutes is again coming down to 10 rupees, and the other side is inflating. So these kind of spikes, they call it as injections, whatever language you call, that was killing everyone in the market. Last 1.5 years, it was a nightmare for option sellers and also buyers. So this is going to be a boon for the market dynamics overall for the removal of this particular daily expiry. So only there are only going to be 2 expiries in a week. One is going to be Nifty, the other one is going to be Sensex. The only pain is like a lot of people are fond of Bank Nifty. Since SEBI has forced NSE, that's what I like to call. SEBI has forced NSE to opt for Nifty. So this is going to be, that's the only challenging part, but that also will be taken care if this volatility is coming down to a great extent. The third and final point, which is not spoken by many people, I have searched in YouTube also, but in my opinion, it's going to be extremely good for retailers, is intraday position monitoring limits. This is already there, but the way it is implemented is going to change in the new regulations. It says a particular client should not have more than 5% of the total contract value at any given point in time. Say for example 25,000 call option, one FPI should not have more than, say if there is 1 lakh contracts, not more than 5,000 contracts should be held by one particular individual person. But this is monitored at the end of the day. So what these people will like to do, they will move the market like anything, and like a good boy, they will square off all the positions and they will be within this 5% limit at the end of the day. But now SEBI has said they can do this check randomly at any point in time, 4-5 times of during the day, and they should be ordered at any given point in time. Which means a particular individual cannot pump and dump on a particular contract, thereby the volatility is going to definitely going to come down once this regulation is being implemented. But the only pain point is this regulation is going to be implemented from 1st April 2025. But this is going to be a game changer for whom? All the retailers. So these are the points I thought I'd like to share, the big revamp which is going to happen in our industry. I hope this video is a bit lengthy, but I hope it finds useful for you. Cheers. We'll connect in one more video. Thank you. Goodbye.